Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. It's a pleasure and a privilege to be before you again. We have a few things that we want to talk about. We want to get this in a little early. I said that I wasn't going to talk about ticker symbol SOXL, but I will because it mooned again today. We're going to talk about what I did with my moves. I did like I did yesterday. I did what I showed you yesterday, but I want to be clear. Some people thought I was bearish. I wasn't bearish, but I'm going to talk about the 80-20 rule, and you guys are going to understand what I'm talking about, right? So there's a lot going on. Let's put these on so I can see these screens here as we get a little older. Okay, so let's see what's going on. We could see that the stock market today, AI chips, technology stock rally, overcoming ceasefire worries. Okay, so what they're saying is what I was saying yesterday, that there was a ceasefire worry. But the market shrugged it off. The market did shrug it off on yesterday. Let's read a little further. As of roughly noon ET, all right, Eastern Standard Time, the S&P rose 0.56% to 75.24. The NASDAQ climbed to 0.78%. We can just go right there right now. We could see that the NASDAQ is now up 1.25%, and it is bullish. That means that my money makers, all of my money makers, are making money right now as I shoot this video. Okay? So my money movers, should I say. So we're going up right here. We could see the S&P is up 0.82%, and the Dow has turned around and now has added 188 points, 0.36% up. You could see right here we had this big pump on the NASDAQ, 350 points. But, you know, I always go out to the week and see where are we for the week. For the week, we are basically flat. And for the month, we are up a little bit. So we buy the lows, we buy the dips, and we sell the rips when it comes to AI, all right? That's what I'm saying. Ticker symbol SOXL. I had to think about that for a minute, right? I explained that on yesterday. Technology is still strong. If you don't believe me, look at ticker symbol MU Micron. It is back above $1,000. Okay. If you took profits, you did the right thing. I'm going to talk about that in a minute. But we could see we're up 7% today. Just came back roaring. All right. But for the week, we're still down. And for the month, we are up. Okay. I want you guys to start zooming out. When in doubt, zoom out, and you could see everything that is going on. Now let's look at why the chips are up, and then I'm going to play a short video for you guys. Chip and AI stock are rallying today as investors embrace a healthy reset and a buy the dip following recent volatility. The broader market is also stabilizing, with majority firms advance custom AI infrastructure, and analysts release high bullish forecasts. Okay, high bullish forecasts. While major firms, okay, so everybody's going to be a bull now. Remember, I told you guys, when it's bearish, that's all you're going to hear is the bears talking on all of the news, all right? All of the reports, bears is going down, it's going to zero. And when it's up, then they play you all of the bulls, okay? And then you get caught in a psychological panic to sell, all right? Now, I did some profit taking, and before I play this, I'm going to talk about ticker symbol SOXL. As you can see, I still have some, and this is in my Roth IRA. So I still have some ticker symbol SOXL, and you can see today's gain is up 15% after that pullback. The problem is I was overweight. Okay, I was overweight. I had way too much. All right. Remember, this is an ETF. Okay, and I have a ton of all of the chips, individual chips, I have those too. So I was too heavy in tech, right? Now, when I talk about the 80-20 rule, that just means that if something happens 80% of the times, that's the side of the equation I want to be on, not the part that happens 20% of the times. So I'm up. I have 7,000 in here, but I made 7,000. It just happened to be that way. Remember this from yesterday, guys. I showed you guys this yesterday where I made $3,000 here. Okay, I made $3,000 because it did. The bottom one, by the time I got ready to sell it, it was up even more. See here, 36%. Here it shows you 30%, but I actually sold it at 36%. So I snapshotted. And so what I'm saying is, and then you guys saw me, I made another $1,200 doing a swing trade on ticker symbol SOXL. And then I sold some in my ETF portfolio as I alerted the money movers. Why did I sell when I'm bullish on the overall stock market being higher? I do believe that we will have some pushback this summer. I believe we will have some more dips this summer, right? And I was overweight and nervous. Now, the truth be told, had I held those options, I would probably be up another 8, and the stock, I would have probably been up another $10,000, the truth be told. Am I happy that I sold it? Nope. Do I wish I'd held it? Yeah, you guys know I did. I'm gonna just keep it real. But the stress is gone, all right? Because I was overweight. Now that I made $7,000 yesterday, the $7,000 that I have in my Roth IRA, now that is paid for. It's the house's money. Follow what I'm saying? So now I cannot lose. I can't lose even if it goes to zero. I can't lose because it is paid for. It is paid for. So that's what I'm saying. I paid for it via options, and now I'm going to let the stock ride. Okay? So listen to this commentary on overall AI and tech, because that's what everybody is focusing on right now.
I think geopolitical events are something which are usually overrated, and that's once again the markets have played that out.
Yes, we've talked about the China buyer's strike, and we have worked our way through some reserves. I mean, to be fair, and that's happened all around the world. I am really interested, though, in your view that maybe it's longer-term rates that pose the biggest threat to either the tech trade or markets overall.
Yeah, so, we looked at this a lot, Carl. As you know, that I've been studying bubbles, and we looked at bubbles over the last 300 years. And if you look at what's happening on the AI space just now, it pretty much checks all the classic bubble signs. We discussed the 4O framework that I've had about overinvestment, over leverage, over ownership that we have spoken about, along with over trading as well. And I think that it checks that. But what I think that we also know from bubbles is that they do not fall under their own weight. It is always higher interest rates which end big bubbles. And I think that until we get higher interest rates, this bubble will keep inflating. And that's been what's going on this year. So until I think the 10-year breaches 5%, or the Fed is finally forced to confront the fact that it's been missing its inflation target for so long, until then, it's hard to call an end to this bubble, and it keeps inflating.
So you heard the gentleman. It's usually ended by this potential bubble is ended by higher interest rates. Now, I think that we have something before that, and it's called earnings. And then when the earnings come out, that's when reality is really going to hit the market. When it comes to big tech earnings, here's what I'm going to tell you. Be careful of the FUD that's going to come from all of the media sources, right? Be careful. They keep talking about CapEx spend, but cut on any of them today, they're just talking about how bullish AI is. It's laughable how they whipsaw the market, right? But you and I, we have our eye on the prize. So remember the 80-20 rule. I sold those options, but the way that this happened and with the war going on and all of that, I said, this is 80% of the times I'm up. And then if I don't take profits, then I am being greedy and I might get wiped out. So I take profits more often, even though I'm going to miss out on some of the potential gains. Do you want to be on the 80% side, or do you want to be on the 20% side? Now, I was looking for someone here. I'm going to share this with you, this journey that this gentleman is going through, and I want you guys to watch this. This is OJ, and he is in Money Moves, and he is wise. He's on day 3 today. He's on day 4. And ever since he stopped over trading, and ever since he says, this is enough, let me take more profits more often, he's actually been making money. Things have turned around for him. Day 3, another $255 for the day, being patient and not over trading. Scalp trading Tesla QQQ SPY using a 9 EMA. Breakouts, 2 candle confirmation, which are my rules. MACD and RSI. Thank you for the knowledge. TTS means trust the signal. And that signal is the traffic trader that leads you to the money. And as I look right here on the Qs, which is the NASDAQ, all of my money movers better be making some money right now. I'm going to come and check on these Qs on this run. So you want to learn that, come over to Money Moves, use the traffic trader for free. Everyone in Money Moves gets everything. There are no tiers. As far as tech is concerned, I do believe at some point it will get hit again. Just go to any tech. Just go to a tech ETF, ticker symbol DRAM. SOXL is 3 times leverage, and you will see the whipsawing. So again, I'm still stressing that Larry is going to buy the dips and sell the rips with leverage. But my long term, I'm going to buy the dips on all semiconductors, AI chips, and then I'm going to just keep those. But to offset that cost, I am going to do something like ticker symbol SOXL and buy the dips and sell the rips. So I'm taking profits while I'm building out my long-term portfolio. If this has helped you, please go ahead and hit that like, subscribe. If you have not subscribed, hit that subscribe button. But if you've been rolling with me for a while, continue to hit that like button. If you're on your phone, laptop, any kind of device, just hit more at the bottom. Go to the drop down where it says description and come join us in Money Moves. We'll see you tomorrow. Live, love, laugh, and learn.